Thank you, everyone. So we have a diverse panel here of asset managers, banking, from across TradFi and banking, who are working on crypto investment offerings for their clients. And here we want to really dive into the reasoning and the product offering that you each have on hand. So if we could kick off by having you each please introduce yourselves and your firms.
Hi, so my name is Colla Rensch. I work for Bank Syz. You just heard from Charles, our CIO. We are a family-run private bank with offices across Switzerland. We've been focused on innovation, new technologies, and new ways to allocate capital since we started back in the 1990s with a strong focus on hedge funds. We were one of the first Swiss private banks to offer trading and custody of various crypto tokens. We are now also host of the first bank-backed fund of crypto hedge funds, and we recently launched a Bitcoin-denominated version of that fund, allowing you to try and generate capital returns in a Bitcoin framework.
Hi, I'm Dovile Silenskyte, and I'm responsible for digital asset research at WisdomTree. As WisdomTree, we are a global business, and we issue exchange-traded products. And we have all asset classes, from fixed income to equities to commodities to crypto. Here in Europe, our crypto portfolio is very curated, and we have 6 single coin and 4 crypto basket exchange-traded products. And the total AUM of approximately 1.5 billion across these 10 products. So my role is very much talking to traditional institutional investors about the benefit of having crypto exposures within their portfolios. And we run a lot of analysis, and we target that analysis to client-specific portfolios and show that adding a small allocation to crypto actually improves the risk and return profile of those portfolios.
Good morning, everyone. My name is Vittorio Ricatto, and I'm investor relator at Arkadia. Arkadia is a digital advisory company based in Lugano, so we're actually local here. And it's very nice to have you here, so thank you to the Crypto Valley and also to the municipality for this organization of this event. At Arkadia, we work into the digital asset management industry. We develop active and multi-strategy product in order to give access to the market. But what we believe is key, it's also to provide guidelines, to provide a risk framework, so to control also, to try to control volatility, the reduction of the drawdown also, which is very scary for investors. And we work also as a plug-and-play solution. So for institution who wants to increase the product offering or wants to start to propose product to their clients, then we can work together to develop which product suits best, because we can really do our strategy in a tailor-made way. And so we are happy to hear from you guys. Thank you.
Hello, everyone. I'm Martin Doncel. So I'm responsible for digital assets at Swissquote Bank, which is a leading bank in Switzerland for the retail market. We actually have probably the most comprehensive and large offering in crypto for a Swiss licensed bank. We were the first for the retail side and among the first for digital asset offering as a whole. We currently have around 6 billion of assets under custody. We manage our own exchange for transactions, which runs around 12 billion last year. And we also offer staking, among others.
Now, Switzerland overall has been a first mover in the crypto space, and everyone on this panel, also your institutions were all first movers. Carlos, as you mentioned, you were the first bank to actually offer crypto services. Can you expand, and also for those in the audience who might be from institutions who haven't yet made the leap into this asset class, what was the driving force that initially led you to be interested and open to the idea of crypto offerings?
So initially it was a large internal drive that was responsible for this. You need to keep in mind that Swissquote has always been, both of our co-founders were engineers, and most of our workforce is related to engineering. So it was very attractive in these first years of popularization of the asset class, especially 15, 16, 17. It was very common among a techie audience to be close to these digital asset concepts. So this internal drive went up to the co-founders levels, and in the end there was a large demand internally to launch this product. It was not, which is unusual to be honest, but it was not so much of an external demand, but more of a statement. No? We are the first and leading digital bank. We must be also part of this digital asset or new asset class appearance. And from there, the difficulty was more on technical levels first. So of course now every other company here and there, including Arkadia, etc., everything works now. So you can put some decimals in there. You can do fancy things without requiring any development. Clé en main, as we say in French. It was not the case before. So for us, the bigger steps at the beginning were gathering liquidity and make the solutions run on our banking system. That was really the challenge. It's no longer that. Now the challenge, I think, it's more about positioning, the asset classes that you want to bring inside of the crypto world, the asset classes you want to get exposure to clients. So for example, we added recently meme coins, which was, a very in my opinion, positive move, politically speaking, because, we were policing for clients and now we no longer. So that was a huge change of policy internally. But the problem now, is to keep up with this demand, to list more assets, to bring better the liquidity. Now challenges are more in the liquidity aspects and also safety than technical implementations.
Yeah, I just want to say that actually I agree very much, and also what they did in Swissquote was actually very good. We already worked together, and in this sense, the setup process sometimes is the real value, because sometimes we think maybe, okay, the financial product itself is what it's most important, but actually, I believe that's just the tip of the iceberg. Like, what's the real value? It's beneath, so infrastructure. How do you manage critical processes? How do you do your setup? How do you do your custody, the security, and so on and so forth? So it's a comprehensive view.
And I fully agree. So we, as WisdomTree, we were the first established ETP issuer to issue Bitcoin, physical Bitcoin exchange-traded product here in Europe. We did it back in 2019, and we have managed to successfully maintain this product for more than 5 years, so it has a successful track record. And this is primarily driven by us having institutional model, which ensures that clients' investments are held secure. So when I talk about this, what I mean is, we, for example, have 2 custodians that hold Bitcoin, physical Bitcoin, in cold storage, and that cold storage is in segregated wallets. So if custodian gets hacked, it does not necessarily mean that all the segregated wallets will get hacked. And also, the thing to highlight, there was a lot of marketing noise when Bitcoin exchange-traded funds were launched in the US last year. But I like highlighting to clients that what we have in Europe is actually a better operational structure than what they have in the US. Because SEC, for some reason, it only allows cash creations and redemptions. And in Europe, we are able to have in-kind creations and redemptions. So when there is a subscription into crypto exchange-traded product here in Europe, authorized participant is the one who goes to crypto market, buys that crypto exposure, and delivers it in kind to cold storage wallet at a custodian. So the Bitcoin or Ethereum or Solana or any other ETP that you have in Europe, it only ever has exposure to cryptocurrency. It does not have cash, so it does not have cash drag, because in volatile markets, such as cryptocurrency is, even a couple hours delay in getting cash and actually investing that cash in cryptocurrency can cause a lot of performance noise. And of course, that noise can be positive or negative, but that's noise. And also, it avoids exchange-traded product having any trading costs. Here, all the trading costs that are experienced by authorized participant are passed back to the investor who is trading in or out. And also, European products do not need to have hot wallets for trading the cryptocurrencies. Single coin crypto products can rely purely on cold wallets, which are more secure because they are not connected to internet and hold the digital assets there securely.
Yeah, I'll just ask one thing. In the question of whether it's internal or external forces, I think this whole eco space has been more of a build it and they will come situation. We've seen it even with the ETFs in the US, where we're talking about mass adoptions from institutionals. We're still only at the very early days of that. We haven't seen, private wealth allocating massively, or even, when we see the high-level BlackRocks and Fidelity adding it to their asset allocation, there are still ways to go. So in our perspective, it was a question of being able to stay at the forefront of innovation, being able to offer our clients a broader access to what we think is valuable financial markets. So yeah, for us, it was, again, more internal than external. And as soon as it's there, you immediately see the interest. I think interest in this space is also very momentum-based. So if you try and follow the cycle and you keep getting topped and tailed, it doesn't really help. But building something, we said we launched it just after FTX, and yet we're extremely happy with it, and we were very, very committed to it. And I think it's something that you can feel in the interactions with our clients.
Fantastic. Okay, I want to dive in a bit more onto the ETP side, because we actually, it's been 10 years now. 2015, we had the first Bitcoin ETP that was launched out of Sweden. You mentioned WisdomTree were the first on the sort of institutional asset management side back in 2019. And we've heard a lot of talk last year, of course, with the launch of the Bitcoin ETFs in the US. Where are we in terms of the product offering? Are we still at the spot ETF? Is that where we're seeing the most demand, or what else are we able to offer clients today, and what are they asking for?
Brilliant question. So we see a lot of difference across different European countries. So part of my job, a very big part of my job, is traveling across the whole Europe and talking to investors in different areas. So some regions, such as Switzerland, they're very much ahead of other regions, such as Nordics. So in the regions where investors have had an ability to have spot or physical Bitcoin exchange-traded product in their multi-asset portfolios for the past few years, and when they did this, now they start looking for, what else could I have within my portfolio? Is there an altcoin that could be a good complement to my Bitcoin exposure to have some diversification? In other regions, such as Nordics, where I think they are still way behind a few others, people who did not go with Bitcoin from day one a few years ago, now they are no longer so sure whether going just with Bitcoin is the most sensible approach. So they are very much looking for crypto basket exposure, because they want to take the same approach for crypto as they have for equities. So for example, when most investors invest into equity exposure, they invest into, let's say, S&P 500 ETFs or index funds. So now investors who recognize the value of having crypto within their portfolios, they're looking for S&P 500 of crypto. And for example, we at WisdomTree, we have 4 crypto baskets. And the most recent product that we launched is tracking CoinDesk 20 index, which captures 90% of crypto market cap, crypto market liquidity. And this product is gaining a lot of traction from investors across Europe who do not want to have exposure to a single token that they're not convinced in, and who do not have a digital asset research person such as me, who could review all the available tokens and identify the ones that they should be holding within their portfolios.
This question of diversification is really interesting, and yeah, I'd be interested if for others how that's resonating, or how you would even explain that at this point in time, given the overall sort of volatility and shift in what alts are available.
Yeah, I think it's a fascinating question, and I couldn't agree with you more. But at the same time, there is no beta play in the crypto space yet. There is no definition of an index. There is no S&P 500. You talk about one index, someone else talks about another one. One will take out meme coins, one will take out this or that based on liquidity factors or availability. And I think it's one of the key developments that we need as an industry to move forward, is to figure out some form of standard, some form of index that we can agree upon. And I think at the moment, there's still a lot of fight between these different index providers, which creates a lot of noise for investors. And when I'm talking to clients, there's definitely this question of, well, should I really only have Bitcoin now? And for us, it's always very important for them to get to understand the various constructions of these indices. And it adds a layer of complexity, whereas in equities, you can just come in and say, oh, I want the SMI, I want the S&P. There is complexity lower down, but it's still, for me, not unified enough. And it's something that I really hope that we can get to something, you know, by year end, maybe next year. Maybe with US ETFs allowing, you know, multi-tokens. At the moment, it's still a fight. It's still hard to get further down the chain than Bitcoin and Ethereum. Maybe that will help. But that would be my wish for the future, is to have a unified and, you know, broadly agreed on index for the space.
And Vittorio, you're taking an active management approach.
Yeah, I just wanted to add something, because I totally agree. Like, well, first of all, right now the ETP offers is absolutely perfect. Like I would say, the instrument, the ETPs, the ETF are already like perfect. So in this sense, I would say like the market, I would say it's very well covered. And I totally agree with Colla, what you said. It's like, still the market is still very not mature. Like today we don't have such things as S&P 500 index or something like this. And that's why, and this is also the mission of Arkadia, that's why we believe like a passive approach and just having the exposure to the sector, it works good now, it can work better when the market will be more efficient, where we'll be like with more players and more volumes. But we must not forget that this is like a new asset class, a new ecosystem. There are plenty of blockchain, plenty of protocols, projects, tools, bridges, DEXs, wallet. I mean, there's a lot to do, NFTs, a lot of technology, and a lot of also possibility to grasp value from the, you know, the humus of the ecosystem. So like getting the exposure on the token is good, absolutely. But we believe we can go even further. So that's why we are building already second generation investment product, where we can actually go into the blockchain, grasp the value from that, and emphasize it. Of course, everything, as I said before, with the risk management approach, of course, we are not like crypto naive, we go wherever, but still a very well regulated and very well concentrated approach.
Well, I tend to be a bit contrarian on these conversations. I think indexization, something has to come, because it's the most popular way of investing nowadays in traditional equities. But I think there's a key difference that barely nobody talks about, which is because you index things, you standardize things. And that's a problem when we're talking about a high growth, very mature market. That's why in venture, you rarely see people talking about indexes, and you see them more naming people and their funds as the index. I think by deference, the index today in crypto is Bitcoin. So what you do is you match any asset against Bitcoin, and that's a way of referencing the performance of the asset people know against the performance of the assets people don't know. So I think that's one way of indexing in crypto, is matching against Bitcoin. And I think it's barely valid, but it's something, at least for a reference. As traditional markets are so used now to index benchmarks, I need to compare, especially on wealth management side, for example. I need to compare to something to show my clients I'm doing a good work here and there. For the ETP issuers, I need to benchmark myself against the traditional benchmark to see if my track error is slightly better, slightly worse, or my risk ratio, no? and all of these Greek ratios, as I say. But for me, for such a growth and high capacity market, I think it would be a mistake in the longer term to start today looking for indexization and putting the market on that. I think there's no other way to doing, so it's going to happen, unfortunately. But I think it will create a little bit what happens in the S&P 500 and other indexes. We will have companies no one knows of. They stayed in the index for 30 years. They are raising capital passively without any kind of results given to investors, but they are attracting passively money from all of these retail and also sovereign wealth funds, but also wealth managers through these index funds. So I think it's unfortunate that for a high growth market like digital assets, we start to index so fast. I think it will be a mistake, but it will happen nevertheless. So hopefully it doesn't, but it will.
So now let's dive into customer demand. I think for a number of you mentioned that actually launching crypto products was internally led, and also as first movers, so you've had experience over multiple years. How has client demand been evolving? And how have industry events, sort of the FTX blow up or regulatory movements in the US now, how has this been affecting what clients are wanting and looking for?
I think, as I mentioned earlier, clients are very momentum-based. But what's interesting is every time it goes up, interest picks up. Every time it goes down, it lowers, but it settles at a higher base. So I think overall we are in a very positive drift situation. But there was definitely way more questions post-election, November, December, than there are now. You feel that clients have this, kind of urge to see something move, and they feel they're not in it or not in the right one, and so they come to you as their advisors, and they ask, okay, what should I do now? I've missed this. And as soon as it's down, 10, 15, 20%, they're kind of like, whew, I dodged a bullet. And then you ask them, okay, do you want to buy now? And they're like, well, it's down 25%, so it might be better off waiting. I think that's why we also focused on a combined offering of you can have your directional play through holding tokens, or you can benefit from the inefficiencies in the market through our fund of crypto hedge funds, who is mostly market neutral and is trying to capture performance without that volatility. So it's not a crypto play, but it's a way of leveraging the inefficiencies in the crypto market to generate returns.
And for me, most of the clients that I talk to, institutional clients, they take their time to get all the sign-offs, get their compliance, risk teams, everybody comfortable with crypto. But the key point that we are now discussing is looking at the market caps of the investment products that are easily accessible and tradable by those investors. Digital assets represent approximately 1.5% of the total investable market cap universe. So for investors who want to have market neutral exposure to equities, fixed income, crypto alternatives, having 1.5% allocation is a market neutral exposure. For investors who have zero exposure to cryptocurrencies, they're making an active decision to underweight this asset class. And of course, most of the investors I talk to, they get paid to make active decisions for their portfolios that they're responsible for. And I say I will be more than happy to help them make that active decision, not to have any exposure to crypto, but for that, work needs to be done. You can't just ignore an asset class, which now represents approximately 1.5% of all investable universe.
Yeah, also, and Dovile mentioned it before, they are doing very good in WisdomTree, I believe also everyone here, to also educate portfolio manager about the importance of having a small proportion for now of digital asset, which is very important. And in the past 2 years, when the market is growing, it's very easy also to get this exposure, and sometimes maybe even the portfolio managers avoid to ask themselves some question like, what is this asset class? How should I get exposure for how long? Like, what's the strategy? What's like, a bigger plan, I would say. And what we see, for example, in terms of client demand, it's an help in doing this because, for example, also in the panel before last, Mr. Charles as well from Syz Bank, he was saying brilliantly that Bitcoin doesn't have a CEO, doesn't have an advisory board. It's just like an algorithm. We can say it's just a software. And so this is actually very good because it's its strengths, but also it's very scary because there's no one you can rely on. And so what we are asked, it's, okay, I want to get an exposure, but please help me because I'm afraid. So there is the need for someone with the hands on the wheel.
Yeah, and I think it's historical, because if I lose my money, I don't care if somebody goes to the prison or not, to some extent. If the guy that make the decision and then in the end wants to, okay, it's the same. I will not receive more money because he goes to prison. So in the end, but yeah, for us, there's a huge split between retails and institutional. So it's very huge. Retails, of course, were used to spot immediately. They were extremely early exposed to and had the possibility to do so. So they're used to spot. Then you have the investors that believe, my Bitcoin can fly away or something. So ETFs, popularization of them was a very good point. And for institutionals with very counted exceptions, like you guys at WisdomTree or others in the ETP space, most of them are now also looking at strategic, addressing the market strategically, but again, with moderate 1 to 3%, 5% for some. Corporates being an exception if you compare them to financial intermediaries. But yeah, no, I think it's evolving in the right direction. I hope it doesn't indexize again, but we will see.
I know we're out of time, but just very quickly, can you each give very briefly what you're most excited about in terms of product roadmap for 2025?
I can go ahead. Crypto baskets. I think that, I know you are against indexing, but I think this is what investors want, and I think this is the most sensible approach for the ones who do not have digital asset expertise in-house.
Okay, crypto baskets.
I'll say two. I think stable coins, and as I said earlier, I hope for some normalization around indices.
For me, it's product that control volatility and mitigate the risk.
Exactly the same. Funds that can manage volatility and get ahead from that. Yeah.
Managing risk. Okay, perfect. Thank you, everyone.
Thank you.